Before we welcome on board Krishna Memani, let's take it across to Vivek and find out where exactly is Oppenheimer Funds bullish. What is it that they've been buying? Where is it that they've been reducing when it comes to their India exposure? Vivek joins in with more details. Vivek?
Well, if you're talking about this particular name, it's one of the smartest funds around, globally extremely well-reputed name. Their India exposure is close to almost 27,000 crore rupees. And, it's concentrated across a few key sectors. Number one, private financial space, a lot of long-term only funds actually have a lot of exposure here. Oppenheimer is no exception to that. HDFC as well as Kotak Mahindra Bank is where they have almost 3% of their equity in, 3% in HDFC and another 3% in Kotak Mahindra as well. Very interestingly, in the building material space, they have exposure to two cement companies. Ultratech Cement, the leader as far as by far India's biggest cement company, over 100 million tons of capacity. They have almost 1.7% stake of their fund over there. The other one is Dalmia Bharat. Remember, Dalmia Bharat for them is a recent entry. Valuations is something that may have prompted them to actually get into Dalmia Bharat, and also aggressive capacity addition is something that the company is undertaking. Other than that, if you're talking about the healthcare space, this is one space that the company is quite bullish on. Apollo Hospitals is where they've taken a serious bet. Biocon, again, a slightly different pharma company. And another one, Dr. Reddy's, is where also they have some amount of exposure, given the fact that in Dr. Reddy's, there's a lot of ANDAs that are there in the pipeline that this particular fund actually may be believing could actually lead to a lot of monetization opportunities. Other than that, if you're talking about some of the other names that they have entered into, Z Entertainment is an interesting pick. Almost 6.8% of their fund is in Z Entertainment, clearly betting on the Indian media space. And also, if you're talking about Cholamandalam Investment, this is one name that have almost 8.5% of their fund. So in the recent past, what they've actually done is they've added to their investments in Cholamandalam Investment, Kotak Mahindra Bank, and a very interesting exit has been Infosys. So clearly some amount of profit booking as far as the IT space is something that you're seeing in Oppenheimer Funds.
Okay. Right. Vivek, thanks a lot for that. Krishna Memani joins us now. Krishna, good morning. Thank you for joining us. There are a lot of global worries which are centered around trade wars, European crisis. What is your sense? I mean, do you think for emerging markets 2018 will be a tough year?
The underlying trends in the global economy are still extraordinarily strong. The growth outlook for emerging markets is quite good. Growth outlook for even Europe is reasonably good, and in the U.S. things are accelerating. So I think at the end of the day, it's those things that are going to drive where the markets end up, rather than temporary political issues that we face in Europe. Recognize that we have faced these issues in Europe ever since the financial crisis, and we have found ways of getting over them. We dealt with the Greece issue. Actually, the larger issue was with Spain, when unemployment in Spain was extraordinarily high, and there were all sorts of political issues and economic issues, and we dealt with them. So the point I'm trying to make is, yes, these are important issues, and in the near term, they can make a dent in the sentiment in the market. But at the end of the day, we will find ways of dealing with these issues in a reasonable time frame, and the markets are probably going to go higher rather than get bogged down in the political issues.
So Krishna, how is it that you analyze the environment of the market in the medium term, and what factors, according to you, are at play right now?
So as far as the Indian markets are concerned, there are a couple of issues. One, growth in India is reasonable. And I think at the micro level, at the company level, the outlook in India is quite good. The challenge India faces today are twofold. One, the higher oil prices clearly have implications for inflation and current account deficit, and the strength of the dollar, although the dollar isn't very strong, but it clearly has strengthened, and that puts a dent in all emerging market, not because emerging market growth is going to slow down, but the investors' desire to invest in emerging markets from developed markets slows down. So those are really the two key issues facing the Indian markets in the near term. The underlying fundamentals are relatively stable. From a longer-term perspective, the outlook for Indian markets is critically dependent on the outlook for Indian consumer, and that in turn is critically dependent on job growth and the quality of job growth that is going to manifest itself over the next decade or two.
How did you read the quality of earnings in Q4? Do you see the momentum which some of the companies have reported? Is that here to stay?
As I had indicated earlier, at the micro level, at the company level, things are looking reasonably good. At the again, if you kind of aggregate all of those companies, the growth outlook is stable. It's not spectacular, but it is definitely stable. And the consumption picture is looking decent, but it is being driven more by the decrease in savings rate than it is being driven by the increase in or income growth. So those are challenges that we'll be facing in 2018. But I think to some extent the larger challenge in late 2018 and 2019 are going to be political in nature. That is, what exactly is the government going to do, and how all of that will play out ahead of the critical elections in 2019, I think is going to be the primary driver of the investment sentiment in India. It's not going to be driven that much by earnings, from what I can tell.
Okay. The Modi government completes 4 years in office, Krishna. How is it that you see the work done so far, and what things they should have done differently in your view as an FII?
So if you think in economic policy terms, the Modi government has implemented quite a few interesting and forward-looking initiatives. Some of them have worked out reasonably well, and some of them are works in progress, as people say. So the things that have worked out or are looking much better today is the implementation of GST. So GST was implemented from a resource mobilization standpoint, from a longer-term funding the initiative standpoint. GST was a critical piece of a critical initiative that needed to be implemented, and I think they have successfully implemented it, despite the fact that the implementation process has been somewhat challenging. But I think we are through most of that, so that's a good thing. I think from a rural policy standpoint, they have implemented quite a few initiatives, and that certainly has helped the income growth in rural populations and consumption in rural populations. So I think those things are helping. There were a couple of own goals, the things that they didn't need to do, but they did. That ended up hurting the Indian economy. We are kind of done with most of that, but I think it's worth noting demonetization kind of makes the list or tops that list. That is something that was done hastily and perhaps wasn't fully thought out, and it caused a disruption in the Indian economy that we have finally come out of it, but it didn't need to happen the way it actually happened. So on balance, they have implemented quite a few policies. Some of them are working, but I think from a longer-term perspective, they are on from an economic policy standpoint, they're definitely on the right track.
So how is the FI stance on India right now versus other emerging markets?
Yeah, so the outlook for India is driven by two things: the longer-term consumption-driven economic growth that is going to manifest in India over the next few decades. That's one. But at the same time, the current valuation levels are equally important. And on that front, relative to other emerging markets, Indian markets are just not that cheap. And if kind of the financialization of the Indian economy continues, that is probably going to be the case for the foreseeable future. So, we as investors like the long-term trends, but we just don't like the valuation that much, and that is the kind of that's the sort of issue we are dealing with.
Right.
Right. So, do you see a cyclical recovery coming in earnings anytime soon?
Yes, of course. So the point I'm trying to make is, if you are a long-term investor and want to invest in a country for the next few decades, India is a fantastic destination. And that's the approach most of us have taken, much like we want to be invested in emerging markets, and within emerging markets, we want to be invested in India because it has the best demographic picture, and hopefully it gets the demographic benefit by creating new jobs and growth in consumption and things. Those are longer-term stories. Near-term, outlook for India really depends on the cyclical recovery and valuations. And cyclical recovery is playing out okay. It's stable. It's not accelerating in a big way. Relative to that, valuation in India relative to other emerging markets is on the high side, and that's the biggest negative in the near term.
Let's talk about sectors like private banks, which are at a record, Kotak, HDFC Bank, IndusInd Bank. What is your call there?
So the private banks, in our view, are one of the better opportunities in the Indian markets, despite their high valuations. And the reason for that is relatively straightforward. The financialization of the Indian economy continues, and there's a lot of growth opportunity in that space. And the public sector enterprises in that market opportunity haven't been able to deliver, and they continue to struggle with their NPAs and things like that. So the outlook for public sector enterprises is improving in the banking sector because of the NPA resolution regimes that the government is putting in place. But from a longer-term perspective, the biggest beneficiary of the financialization of the Indian economy are going to be the private banks. There's just an enormous opportunity on that front. Just look at the size of the banks you have in countries like the U.S. and places like China. As long as the economic growth is there, the size of the banks are going to be gargantuan, and we are just kind of beginning that journey.
What about auto stocks, Krishna, especially given the kind of strong numbers that we've seen, and they're sustaining the monthly sales data, but how is it that you see the valuations that some of these auto stocks are sitting at?
Yeah, so again, the story there is again stable, but nothing extraordinarily exciting. Having said that, we focus more at a company level rather than sectors. The consumption story in India, which is the driver of the auto sector, is actually quite decent. But at the end of the day, for that sector to get to the next level, you need income growth to accelerate, and for that you need job growth or quality of jobs to accelerate. And things are okay, but they're not spectacular.
Now, FMCG stocks stole the show for the quarter gone by because of strong earnings growth. What are your thoughts there?
Again, we would kind of instead of talking about specific sectors, what we try to do with companies in emerging markets in general and specifically in India, we focus on individual companies rather than sectors, and the reason is very very straightforward. Again, you can have a company in a sector that is kind of beaten down where the growth outlook is not very good, but that particular company may be executing in a very tough environment relatively well, and so our approach is to focus on companies rather than spending too much time analyzing sector outlook.
Right. Have to talk about the contrast. What about pharmaceuticals and IT? Because that's a space you look at very closely. Is the worst getting over there?
Oh, very much so. Very much so. Again, we believe that those sectors probably offer the best value because you can find really good companies executing very well in a very challenged sector. And from a longer-term perspective, those end up being the best investments you can make.